Welcome to.
If the numbers are to be believed, Jason, we have 4 people in the audience.
That's beating the
And we got someone in the chat. Hey, John.
John. Hey, John. Hey, John. Yeah, welcome everybody to the very first of the First Fridays, brought to you by the Smattering. I'm Jason Hall, joined as usual by Giuseppe Santorini. Can I just call you that now?
No, I like my actual name. You can and Jen's here. Watch out.
Uh-oh. Coming in hot.
Jen,
Eric's
you
here
can
too?
heckle as much as you want. That's the whole point of this. Heckle
the
away.
idea. There it is. I don't know, man. Giuseppe seems to be sticking. Jeff Santoro, the voice of the people. I should give you your full introduction.
Thank you.
How are you, buddy? Happy Friday.
Happy Friday. This is something we have talked about doing for a really long time, and it wasn't until recently that we realized Riverside had the feature to do it.
Oh no, I've known.
Oh, well, that would have been a good thing to
Just didn't
share.
tell you. Yeah, I just didn't tell you. Yeah.
So yeah,
Yeah.
if this works and people enjoy it and we get, enough people to come on, we'll try to do this on the first Friday of every month when we're available. And it'll be loose and we'll take questions and have some fun.
Yeah, we've actually got some topics planned before we get to them though. John's comments, and we met John in Omaha.
Yep.
And you've got one of these shirts as well. He's saying, nice shirt. I want to show the back of it because these were our for our running team for the 5K, the Brooks 5K. And I'm pretty proud of these.
We're going to see Jason's good side here. Let's move to the side a little bit so we can see the bottom of it. It says, run your race. Run your race. Can you stay like that the rest of the show? It'll make it easier for everyone to watch.
Yeah, I definitely have a face for podcasting. There's no doubt about that. So, all right, well, let's do this while people are hopping in here. I'm going to go ahead and share. Let's get this going. We're a few minutes in here, and we do want to have a pretty reasonably tight. Try to get in the things that we have planned. First topic: Jeff Santoro, Jeff's quiz.
All right. I thought this would be fun. And now this has gotten more interesting over the course of the week. So when we started planning for this earlier, I had this feeling that the market has felt weird for a while. And it got me thinking, I wonder if you, without looking, could tell me how the market's done over various semi-recent periods of time. Now, this got a lot more interesting after the last 2 days. So it is 4:03. The market is closed. Jason, how much has the S&P returned over the last 1 day? No, I'm just kidding. 5 days. What is the 5-day return of the S&P 500?
So that's this week.
That's this trading week, Monday through Friday. Do not look. Hands where we can see them.
Here's my hands. Yeah, nothing in them. I'm just standing like this.
I believe you. You can come back to the mic. All right.
It's the problem. Like I've already forgotten what the market did on Monday.
Like, I know. But this is going to get my point will be driven home as we go further out. But we're starting with this week. What do you think?
I'm going to say the S&P 500 is up 3% for the week.
Ooh, not bad. 5.8%.
Okay, so the beginning of the week was better than I was expecting.
Okay. Last month.
Down 2%.
Up 3%.
Huh. Okay. All right.
6 months.
6 months would put us in like May.
Yeah.
Probably down 12%.
Up 6.5%.
That's so really we're talking about like August was the peak. Like it just from May to August it shot up and then it's come back down. Okay.
Yeah, like late July more like was the peak. But yeah, you're on the right track. All right, year to date.
We're probably back to double digit returns. I'd say right around 10%.
13.5%.
Okay. Wow.
And we'll just do one more. Last year, 365 days.
Okay. It's up 20%.
17%. So not bad.
Yeah.
So the reason I was thinking of it was before we had these last 2 days, where like the market was up and several stocks were up double digits, and we'll talk more about that later. I was kind of feeling like it's hard to get a gauge for how it's been because like it was like 1 month was really bad and then the next month was a little bit better, but we were still feeling the last month. So it's interesting. You weren't super close on some of those, but yeah, it is up on all of those timeframes, which is interesting.
Yeah, well, Ken's asking us the most important question here.
That's right.
What's it going to be doing in the next 6 to 12 months from now? Those are definitely the hard questions we need to ask. And if my even directionally, I was kind of good on the longer term stuff, but like the near term stuff, I was pretty way off.
Yeah.
Right.
'Cause it
Yeah,
doesn't feel like it's been up. I think again, with the exception of the last 2 days, it's felt crappy, and I think we all know how what month was it? October? I mean, September is the month that's always really bad historically. I don't think August was great.
so
Pretty
I
pretty way off. Yes, Eric, thank you.
I was just sending a tweet out to let people know that we're live, and I wanna remind everybody too, we do wanna take questions. So, we can take questions through the chat here, those of you that have found the chat. Also, tweet them to us. We're gonna be monitoring our Twitters. I'm gonna be monitoring the show Twitter on my phone. I have my Twitter up on the screen here. Jeff can monitor his as well. Don't email us. If you email us, we'll put that in the next mailbag. So
That's right. Alright, so that was a little quiz to start things off to see how accurate you are with market sentiment.
let's do this. Let's do our next topic here. We're not even quite 10 minutes in. So we can take our time with this one, but this is one that you came up with, and I really like this a lot because there's the difference between a great business and a great stock, you know? And there's lots of great stocks out there that maybe it's not the right great businesses out there. Maybe it's not the right time to buy this stock. So I'm going to turn the question around on you, even though it's your question, but you put me through the pop quiz there. So I'm going to ask you to kick this one off, and then I'll weigh in. What's a stock that you'd love to buy, but it's just too expensive?
Alright, I'm gonna give the obvious one that everyone's probably thinking, and then I'll give at least 1 or 2 other ones. So, the obvious one is NVIDIA, 'cause I know we both own it. I'm sure a lot of people watching and listening own it. And the reason I did think it was worth talking about is because it has historically, and you and I think, are on the same page with this, we feel like it will, in the future, give us multiple opportunities to buy it significantly better prices than you could get right now. Um, and so this is just, I think it's an interesting conversation to have because you hear people say things like, what would would you buy this stock right now as a way to like check your portfolio for things maybe you should sell? And I don't know that that's always a great exercise because I love Nvidia. I want to own it forever. I want to add to it in the future. I wouldn't do it right now, just as one example. Um, I'll give one more and then you can chime in. So another one that I has done really well for me. It is up 100.9% for me right now, and that's Celsius Holdings.
Mhm.
I have not bought this stock in, let's see, when's the last time? The last time I bought any shares was December of 22. So I haven't bought it at all in 2023. Um, it trades for more than 13 times sales, I think, and it's up 100%. I like the company. I think it, by the way, it's an energy drink company in case anyone's not familiar with it. If you walk into any convenience store or grocery store in your area, you will likely see a lot of it. Um, they signed a distribution deal with Pepsi about a year ago, I think, and so now they had this very fragmented distribution network before then, and now they're consolidated into Pepsi's uh, distribution network. So you can just imagine, everywhere there are Pepsi coolers, you're now going to see more of this product. So that's another one that I'm kind of keeping an eye on. I really like it. I want to buy it again, but still a little bit too pricey for me.
Yeah, so I've got a couple, and so after I share mine, and I'm not gonna get too deep in them because we're actually gonna talk about them more in the news. Um, I want you to think about something else, maybe a company that you would love to buy, but for some other non-valuation reason,
Mm.
you don't wanna buy right now, or maybe you have some you don't wanna add. So think about that. I wanna talk about that too. Um, and the first one I'm gonna give is Kinsale Capital. So expensive.
Yeah, that was the other one I was gonna mention actually, so
Yeah.
I'm glad you did it.
Yeah, even after the big haircut that the stock just got. Again, we're gonna talk more about it, so I'm not gonna give all the details here, but to me, this is like such a great reminder that even after a sales 10, 20, 30%, sometimes it can still be incredibly expensive, and that's certainly the case with Kinsale. You look at it, and this is an insurance company, so price to book value is a pretty useful metric along with price to earnings, but particularly price to book value, and I don't know, what does it trade for? Jeff, I haven't looked at it today, but it's probably still 10 times, 6 times. Like, it's
I don't know, I had to look it up.
very, very high multiple of book value, and generally insurance companies, like the really good ones, like 2 times book is a high multiple.
Yeah,
That's
our good friend, and I'm sure a lot of people on here know Lou Whiteman. He's got a great newsletter that he puts out very infrequently, which is the whole point of it. It's called Fits and Starts.
it's
But
it's it's just right there in the name.
yeah, but the last one he did, I believe his last one, he wrote about Kinsale, one of the last ones,
It was this
and
week.
that was kinda his point.
It was over 11 times book value, price to book value, before it reported earnings, and now it's down to a meager 8.5 times book value. So,
So we
yeah,
got some
love the
questions.
business, own it. It's been a huge winner for me. It's up over 400%, Jeff, for me.
Yeah.
It's been a massive winner.
Yeah, it's been what is it for me? It's only up 17% for me, but I've obviously owned it a lot less time than you have.
Yeah.
All right, we have some questions here. Jason, it seems the short report was wrong on Brookfield. Thought on Oak Tree Specialty Lending supporting a 12% yield, Howard Marks company, which is part of Brookfield.
Yeah, so we'll start, John, we'll start with Brookfield Infrastructure. It's really interesting because I've actually been asking a lot of people about it. We recorded a hot take, or excuse me, a rough cut about it, and I don't think we've published it yet. So we'll probably publish it early next week, where I express my overarching concerns about Brookfield in general, because so many of the Brookfield subsidiaries have substantial amounts of debt. Interest rates have gone up. I'm concerned about cost of capital potentially affecting the business. And they're also relatively opaque and very complex entities because of all the um, close party dealings with other Brookfield entities and some of the funds in Brookfield Asset Management and all that kind of stuff. So I certainly have some concerns there. But I've tried to read through the short report, and I read a fair amount of it. And I think that the person who's short has just got it wrong. I really do. I think they've got it wrong. Part of the reason I think they got it wrong is because Brookfield, all of the subsidiaries like Brookfield Infrastructure, Brookfield Renewable, Brookfield Business Partners, they have a history of buying and selling, and they do tend to sell a lot of assets at higher multiples and higher realized prices than they bought them for. So that's a little bit of like kind of evidence that they're not necessarily cooking the books on asset values. Um, and also, you know, I trust Bruce Flatt. He's been there, I don't know, 24 years at this point. He's the CEO of Brookfield Corporation, Brookfield Asset Management. Brookfield Infrastructure is a subsidiary of those companies. These businesses are run by Bruce Flatt acolytes, I think is really kind of how I think about them. They're very conservative, value-focused buyers. Brookfield Infrastructure they just bought a bunch of data centers out of the Cyxtera bankruptcy. They acquired some assets there. They're really good at that kind of thing. So I don't agree. I don't agree with the thesis of the short. And then you mentioned Howard Marks here, John. So Howard Marks, the founder of Oak Tree Capital Management, which was acquired by Brookfield a number of years ago. And of course, Oak Tree Specialty Lending is the portion that remains public. I don't own any of that particular vehicle, Oak Tree Specialty Lending. But I do know that like there's a lot of Oak Tree's really good at like being the lender of last resort, right? The payday lender to corporate the corporate world out there. So they can get really, really favorable terms and high yields. Because there's a lot of hooks in their deals. People come to them with their hat in hand. They don't have many other choices. TPI Composites, for example, went to Oak Tree because they were about to violate terms of their existing debt covenants, and they were going to have to file for bankruptcy if that happened. So they're positioned so that in the worst case scenario, they get a ton of the assets. And of course, then they have to liquidate it to get to cover their costs. But they're just really good at it. So I think it's probably safe. But again, I haven't cracked a filing on Oak Tree Specialty Lending in 2 years. So you know your mileage may vary. Keep that in mind.
We got some questions here about Celsius, comments about Celsius. Horseman says, I hate that Celsius is succeeding. What makes this company special? As far as I can tell, nothing. And also, I want to applaud you for doing this while you're supposed to be working. Well done. Um, I actually think that this is a good question. I think about this a lot. My initial reaction to Celsius when it first came on my radar was sort of the same thing. Like energy drinks are a fad. Someone's going to find something else. But then I thought more about it. I mean, I think you could have made the same argument about Monster beverage, right? And that was like what the best performing stock of the past 30 years. And I'm not saying that's going to happen with Celsius, but there's an anecdotal piece that has got me a little bit more interested. And that is I work in a school district. I spend a lot of time noticing what teenagers do. I have one in my house. And while my own kid doesn't drink this, I see a lot of younger people, college age and high school age, drinking Celsius drinks. So I know that that's not the reason to buy an investment, but I just feel like there's a chance this could be a thing. It's been a thing. I think the stock's up several 100% since its
No, oh, Celsius.
yeah.
Yeah,
Yeah. So
yeah.
you could be right, Fourth Horseman. It could not be special, but I'm interested at least right now, just not at today's price. And Jen, I have no idea why they're doing a stock split either. I think the stock's only like a couple $100 per share right now. Yeah, 174. So no idea. Maybe they do need it for stock-based compensation. I have no idea.
Yeah, just to put some numbers on it, just because I think it's always fun to think about these. Monster went public in 1990, was I think it was Hanson Natural, I think was the name.
Yeah, most of its
Um,
gains have been in the past couple years, right? Or past 5 to 7 years, something like that?
I mean, yeah, since 2000.
Oh,
So,
I
okay,
thought it
so
was
the
way more recent there was a huge run up. I'm not looking
yeah,
at
I
the
mean, it's
chart.
up 489% over the past 11 year over the past decade. And since, let's look at 2000. It's up 124,000%. Yeah, so that's turning $1 into 120,000, is that right?
You
$12,000?
can do the
Turning
math.
$1 into $12,000?
I don't know. It's a lot.
Since its IPO, it's up like 251,000%. I mean, that's, just I mean, what's the S&P 500 up since then?
Not that much. That I know.
2,300%. So it's 10x. It's 10x the returns.
Yeah. I've heard people make various bull cases for it. To me, the big reason I'm interested is
No,
the
I
Pep
lied. It's 100x
yeah.
the S&P's returns.
I just think the Pepsi deal is huge. You know, if they've been able to be that successful without the reach of a major distributor like that, I just kind of feel like maybe that's the tip of the iceberg. But we'll see. Yeah, we'll see.
Well, I mean, then the Coke to your Pepsi here is that Monster, it was 2015, I think, that Monster signed the distribution deal with Coke. Is that right? Is that right?
I think they are distributed by
No, it's
Coke.
longer than that.
I
It's
don't
longer than that.
remember
No, no,
when.
Coke distributes Monster. They have, but it's been longer than that. It's been probably 20 years. So,
What do you say we move on to our next thing here, which is just to talk about we are in the middle of earnings season. Uh, if you are a nerd like us who likes to follow this stuff, it's kind of like drinking from the fire hose for these couple weeks.
I feel like you're skipping something I wanted to do first.
What do you want to do?
Because remember we talked about expensive stocks, but let's talk about
Oh,
troubled stocks.
okay, you go first because I didn't give it any thought yet.
Ugh, gosh. Yeah, I know. You don't think. You just wait till my mouth stops moving so you can start moving your
Are
mouth.
you still
That's all.
talking?
See, I am. I am.
All
I am
right.
still
I'm
talking. I
gonna
know.
go to sleep and let me know when you're done.
I'm going to go with TPI Composites here. So this is one that I own some of. And for a while it was a big winner, and then they really screwed up. They got way out over their skis on their debt. The cycle turned. TPI Composites, their main business is making blades for wind turbines. They're a contract manufacturer. So like they'll have one facility and they make blades for 5 different companies. So it makes it economic for the whole industry to use them. Um, so anyway, they got in a big mess and they had to go to Oaktree to take on some debt. And this was back in late 2020, I think this happened. And their interest rate on their debt was something like 12%. Back when the overnight rate was 0 basis points. They got this was their rate. They literally almost went bankrupt. Like they got in a huge mess. And since then, it's just been one thing after another. And the stock fell a ton back then. It fell like by half. And now it's $2 a share. And they're fighting for their lives at this point just to preserve cash. And there's like some good things. It's like they're going to end the year with maybe more cash than they started. They're making some progress, but they have like half their cash is going to have to go to pay debt sometime early next year. But the thing that always brings it back to me is like the use case for the business and the thesis is so valid because there needs to be a company that does what they do. It makes the whole wind turbine industry work. I mean, it really makes it work. And there isn't anybody else that's really doing what they're doing. And they have absolutely destroyed this wonderful opportunity for investors by mismanaging this great asset.
So what do I want to talk about? One that I used to really like a lot and I've really soured on is C Limited. When I first got into investing and buying stocks, I remember I picked up Mercado Libre and C Limited both at the same time, thinking and Amazon. I already had owned Amazon, and I remember thinking, okay, I sort of have the e-commerce leaders in these different parts of the world, kind of, and fintech leaders in different parts of the world in my portfolio. And as time has gone on, I've just been more and more disappointed with C Limited. They seem like they've really fallen to a distant third out of that 3 that I bought. I just I don't have any interest in it anymore. I don't have the in front of me. I'm gonna pull up my spreadsheet, but I feel like a lot of the growth has slowed even as they've figured out their profitability issues. Um, it's just yeah, so here's the issue. Uh, revenue growth was 5% in the most recent quarter. Before that, it was 4, 7, 17, 29. So it's just decelerated every single quarter. Um, it used to be a hyper growth 100+% every quarter for a long time while it was growing, and it's really trailed off. So that's one that I have in my portfolio. I've not sold it yet. It's this very, very small amount. I kind of feel like it's worth just leaving to see if over the very long term they can get their act together. But kind of like you with TPI Composites, I know you used to speak very highly of that, and now you have some concerns. I have sort of the same kind of feeling about C Limited.
Yeah. Oh, that's good. So before we jump into the end in the news, because I think this question ties into it, Maria had a question and Eric is giving it a +1. Have you, first of all, Maria, I think as far as I know, Rotterdam may be the farthest
Yes, you win.
from us. Think so? Think so? Yeah, I think
Furthest
so.
away listener or live participant.
Yeah. So you win the fake not completely not real award this month for farthest listener. We'll call it the long distance award or something. Have you looked at Jeff? Have you looked at PayPal's results?
I did.
I know you and I talked about it.
So here's my thing with PayPal. I, as I've said many times on this podcast, I like to keep a spreadsheet of all the different metrics and KPIs for each company. And I like to look at the earnings reports when they come out. I just can never fully wrap my head around PayPal. It's a complicated business, at least for my simple brain. And it makes me never really have a good sense of how it's going to do. So I know this isn't directly answering the question. I can say a few things about it, and then you can jump in too here, Jason. I know that they've sort of shifted their strategy over the last several quarters away from just acquiring users and more towards trying to really cater towards uh, the high use users, right? And I think there's been some positive results from that. Um, like so, for example, like transaction revenue. I'm just pulling up some stats here. Like that's been in the mid to high single digits for the past several quarters. Total payment volume is ticking back up, actually. It was 5% 3 quarters ago, and then it went up to 10%, 11%. The payment transaction per active account is really steady. That's always around 11, 12, 13%. Um, I'm also happy to see they're getting their expenses under control. So I like to track operating expenses as a percentage of revenue. That's coming down. So some things are heading in the right direction. Payment transaction keeps going up. Total active accounts is flattish, but but the one thing I am concerned about, Jason, and maybe you know why this is happening, total payment volume is pretty consistently trailing off over the long term. Like since 2018, it's been sort of trending down and down and to the right. Um, I don't know. I wouldn't say I've soured on the business. I
You
just
mean
it's
payment volume
complicated to me.
growth?
I have a hard time keeping track of everything.
So you
But
mean
everyone I
payment?
know uses Venmo, so
Yeah. So, but
there's
you mean
something there.
payment volume growth is trending down?
Yes, I'm sorry.
Yeah.
Payment
Yeah.
volume growth is trending down.
Yeah. I think so. I'll say I think that that particular thing is just a product of kind of the like a version of the law of large numbers. I mean, we're talking about almost $400 billion in payment volume in the quarter. It's hard to grow a number that's that big at a persistently high rate, right? I mean, I think that's one of the challenges too, particularly when I mean, the use cases are kind of growing a little bit, but they're still kind of edge casey, right? If you think about things like Venmo, when you go in most of the transactional things that people do are going on Visa and Mastercard's rails, right? Um, not not on PayPal's rails, and they're trying to take more of that, and they have a business that's credit card processing and all that kind of thing. But here's my concern. My bigger concern is that not only is that number we're seeing deceleration of growth, but I think the quality of the revenues maybe has suffered a little bit too because things like they're not generating the same amount of fees off the revenues that they're generating. So, total payment volume, up what, 13% on a neutral basis. Revenue was up 9% on a neutral basis. So, and then you talked about expenses. They're working on it, but it's still, operating income was up 4%, 8% non-adjusted basis, both of those on a GAAP basis. This is the kind of business at this scale you want to see the other way around. You want to see
Yeah.
operating leverage. You want to know why Visa and MasterCard have been massive winners? They grow revenue 10%, they grow earnings 18%, right?
Yeah.
And PayPal's not doing that and hasn't for a long time. And I wanna see a little more sign that that's starting to reverse, because I think once that number reverses, that to me is when PayPal becomes investable again. But
Yeah.
right now, I think they have too many problems for it to really be investable for me.
I think I tend to agree. I mean, I agree. Here's where I would disagree a little bit. Like I do think that if you take a very large view of it and say to yourself, digital payments are a thing, there are probably going to be more of them in the future than there are now. I think, again, just speaking anecdotally, everyone I know who sends money to their friends uses Venmo, and maybe
Yeah.
PayPal if I don't want to be an ageist, but it seems to be like older people like to use PayPal.
PayPal's the worst.
I know,
It's
but
the
I think it's
worst.
because it was the first one that there's some people who are just sort of, they figured out how to use
It's like the
PayPal.
person you know that still has an at AOL.com email address.
Exactly. Yeah.
Yeah. Not
Um,
hating on anybody now.
and
You might not even.
I know that people use the Cash App and things like that, but I just feel like, hey, Venmo me for that is becoming the thing people say.
Oh, it's the verb. It
Yeah.
definitely
So in
definitely
that
is.
sense, and it's pretty PayPal's been beaten down. It's pretty cheap. So I could see an argument for picking up shares now and just hoping they can kind of get things turned around. Um, I think it's worth remembering too that PayPal is one of those businesses that really had a whole bunch of things happen to it at once, right? It had the pandemic happen, which just because it was a digital payments app, I think that shifted some of its, numbers in a way that maybe wouldn't have happened in the absence of that. But it also was still at the same time dealing with the separation from eBay. So there was some funkiness with its numbers during that time. And I feel like we're now just kind of getting out of all that weirdness. Um, so I could see the argument for, buying it now and kind of hoping over the long term it gets its act together. But I just, there's not a lot going on that gives me like supreme confidence to add to my position.
Hey, Jeff, I think Dan may have just snatched the trophy out of Maria's hands, or the virtual brewski that Ken had awarded her. Dan from New Zealand has a question that is gonna tie into our next segment. But before we get to that next segment, I just wanna share this from our good friend Sina Hasuna, tweeting this out. "Nothing goes better with a live session with the Smattering Show than a Campari soda." So,
Well played, Cena. Thank you.
cheers, Sina. So, ready for our next,
Yeah.
ready for our next segment, buddy?
Dan is pivoting us directly into the next thing we actually had planned to do. But while we're getting the slide up, I do want to acknowledge Jent's harassing of me, saying that Jeff didn't think, shocked, we should have started a drinking game for this broadcast. So thank you, Jen. I appreciate that.
Well done.
Um,
Well done. Okay, time for in the news. Time for in the news. So, every one of these stocks, the thing they have in common is they've reported earnings this week. So this is a great week for us, Jeff, to have kicked off this show, because there's tons of news in the news. I'm gonna mix this up though. I'm gonna take Dan's first. Dan was asking thoughts on the lemonade quarter beyond the stock reaction. So I'll take that one. I'll weigh in on lemonade. So for those that haven't noticed, lemonade stock is up, I don't know, 50% since earnings. It's jumped 40 plus percent yesterday. And I think it was up 8 or 9% again today. And I guess the one sentence answer to that question is lemonade did okay, but it was much better than the very, very low expectations, comma, plus a short squeeze. That's what we're seeing. That's what we're seeing is there was very high short interest, and the company finally showed. And Jeff, how many times have you heard me say over the past year and a half,
yep.
if they can figure out the underwriting, this could be a monster,
Yeah,
right?
my summary was similar to yours without the shorting part, but I was basically going to say everything was pretty good, but the thing that was very good was the thing
Yeah.
that had to be very good, which is an improvement in their loss ratios. And they're still not where they need to be,
No, it's
but
still not good. It's just not
but
bad.
yeah, it's better.
Yeah. Yeah. So I want to call out a couple of other things. So like did I do a video? I feel like I did a video on our YouTube channel. So
I don't watch your videos, so I
I,
wouldn't
I mean,
know.
I don't watch my videos either. I would never watch my videos. Watch my videos. Um,
All the time.
but so growth is slowing a little bit. Customer acquisition is slowing a little bit, and the premium per customer growth is slowing a little bit too.
Yep, yep.
But I think that's kind of a cycle thing. I don't think that's gonna be a permanent impact. I think those things could reaccelerate. But they did show, like, this is a quarter where instead of a 90+% gross loss ratio, it was in the low 80s, like 83, I believe, 83%.
Yeah, and to your point, so this is why it was such a weird reaction. Like, I would have expected a pop, right? I think there was enough good news in enough important areas to see some sort of appreciable stock jump. But this is what was weird. Customers were up 12%. The last several quarters, that was more like 20, 30%. In-force premium was up 18%. The last several quarters, we're looking at 50, 60, 70, 80% year-over-year growth. Premium per customer grew 6%. The last several quarters, that was in the mid 20% range. So all of those metrics were okay. Revenue dropped significantly on a year-over-year basis. It was great. It was 55%, but the last several quarters, it was triple digit
Mm.
year-over-year growth. So, like, all that, there's some stuff that slowed down, and it could be just like a seasonal cyclical whatever thing and not a trend. And then, yeah, the loss ratios were 83% for the gross loss ratio, 88% for net loss. The last couple quarters were 90s up high 80s. A year
Yeah,
ago, the net loss was 105%.
yeah,
So
and there was
that
catastrophic loss that
Right,
affected that
right.
part of
But
it.
that's what I mean about, like,
Yeah,
there was a lot of good news and
yeah.
good news in important areas, but some things to sort of scratch your head about, and here the stock jumps almost 50%. I mean,
Here's the reason. I think it's really it's this significant, okay? All right. A quarter of the stock float was sold short. That's massive short. That's a lot of people expecting them to report another 90% gross
yep,
loss ratio quarter.
yep. Yeah, that's
As a
probably what
comparison, a company like Apple has less than 1%. So let's look at Meta just to throw like a slightly controversial-ish, maybe the stock has run too much. It's still 1% shares short. So, yeah, this is a short squeeze. This really is. So, in consequence, that means that there is a very good probability if you look at the track record of this stock that it could give back a lot of those gains. That could happen.
yeah.
That could happen.
And we'll talk a little bit more about Lemonade later on because I think we're gonna do a quick review of the Smatterfolio later on, and that's one of
Yep.
the stocks in it. And you can kind of see just how volatile it has been over the course of the year. So we have a comment from John that we'll go back to, but I just want to point out that we have a visitor from Portugal, so another contender for furthest away in
Oh,
terms
no,
of listening.
New Zealand's definitely it. If you go the other way around, maybe to Portugal, but
Um,
yeah.
all right, we got a bunch of stuff here in the chat, so I'm just going to go
Well,
in
let's say
order.
let's save it. Let's work through some more of our in the news, and
You want to
then
do that? All right.
yeah, yeah, I do. Let's save it. So, you wanna talk about Roku? Because I know that's one that's a little bit kind of feels milk toasty to you.
So, well, the reaction felt. See, I
Yeah,
actually was pretty happy with the quarter. So this is one that you and I disagree on. So it'll be fun to talk about. You constantly
this is one that
tell
I'm right about, and Jeff
tell
just
me
hasn't.
tell me
Yeah,
to have fun being poor with this one.
yeah,
Um, and look, I am not a Roku Kool-Aid drinker. I'm fully aware that this could not work out. But um, I've always said when it comes to Roku that I really just want to keep seeing active accounts, streaming hours, and average revenue per user keep going up. And that's what's going to keep me holding. And if I see anything beyond that, if I see something else that's heading in the right direction, it might spur me on to buy some more shares because this is a hold for me right now. And it was another quarter of active accounts going up about 15%, streaming hours going up around 20%, and average revenue per user actually down year over year, which has been the trend the last couple quarters. But revenue ticked back up. Okay, so revenue year over year revenue growth was 20%. It had been 11% in the previous quarter. It had been 1% the quarter before that. And another kind of, I think there was a one time thing that affected profitability in this quarter. I don't remember what it was. But like, again, nothing here that jumped out to me as being spectacular. Like I would have thought this would have been like, okay, some things are heading in the right direction. And, some things aren't, like gross margin headed in the wrong direction. And this one also got a big pop. So um, I think there was I think one of the things that might have contributed to it, big, huge turnaround in cash flow. This company had been burning free cash flow for most of 2022. And then this quarter, $160 million in free cash flow, the quarter before 129. So I think that probably contributed to some of the pop. And there was some good guidance along with it that was going to continue. But Again, a weird one for me. Like, didn't feel like I don't remember exactly how much it was up after earnings, but double digits and didn't feel like it was quite that strong of a quarter.
Yeah, and it's one of those reminders too. It's like one of the things that can move stocks is there's the numbers and then there's the reaction to the numbers, and then there's the things like shorting, right? That can I mean, can absolutely be a force multiplier to a stock's movement in one direction or the other. So,
Did this one
you know,
have a lot of short I didn't look. Does
I
this
don't
one
know,
have a lot of
I
short
haven't
interest?
looked. So my thesis on Roku is that it's a commodity and it doesn't have the platform is not as sticky. I mean, I think that there are people that absolutely love the product, but I don't think there are enough of them to create enough of a scale that this is not an Apple in terms of,
Yeah.
like, the brand power.
I
So
remembered
that's
another thing that I think helped out the pop was there was language on the call about the advertising market being a little bit better than they anticipated
yeah,
and continuing
yeah.
to be better than they
Oh, yeah,
anticipated
yeah,
for
right,
Q4. So I think that was
right.
because that their whole business is based on advertising. That's what's gonna
Well, you look at Meta's results and that's tells you everything you need to know about the ad market, and that's definitely great for Roku. So let me talk briefly about STEM since I mentioned it and Trex and Kinsale, and I'm going to go through these pretty quickly. Again, they all reported earnings, and I'll talk about STEM first. So this is a company that I really admire what they're doing, and I think that what they're doing is important, and I think they have some competitive advantages that are really could be really powerful. So STEM does two things. They first thing like the core of their business, and this is like the land the customer part of it is batteries, energy storage for utility scale. So really large commercial storage, and then they sell, and they're pretty neutral about batteries. They don't rep for any certain brand or whatever. Just they make it the commodity and they get a little bit of margin on it. But their goal is to get the deal and get the install and then sell Athena, which is their it's SaaS, it's AI powered software to manage the power coming in and out of those batteries to get the most economic benefit out of it. So if you're a commercial power user, like Alphabet, for example, and you're using batteries as part of your power management and carbon management and trying to get the best cost out of it, it can help you lower the total cost and make sure you're reducing your carbon emissions by leveraging the power in those batteries based on the source of the power versus how much it would cost for you to versus the power you could pull off the grid. If you're a grid operator or a utility, you can use it when you need peak demand, right? And so you don't have to fire up a natural gas peaker plant, which are super to bring online and then to bring back down. So, and you could put the power off of a coal factory, coal power plant that's got excess capacity and it's super cheap right then to take that power to store. So Athena is the software, and they do like these 20-year contracts for Athena. So it's this really great model where you can get like 80% gross margins, low operating costs. So that's like the STEM model. They burned through a ton of cash before interest rates went up with some other acquisitions and stuff that were smart, but the business wasn't like at scale where they were pumping out a ton of free cash flow that it made sense to do it. And then interest rates went up and it's like, oh shit, what are we going to do? They've really locked down and they've really started to tighten their belt, go back to battery makers to try to rework deals to get better prices and costs because demand is like totally shrinking everywhere. Except for in storage. Storage is actually still pretty strong, but demand is weak through like most of the renewable stuff. So they're kind of using that a little bit as leverage um, to shore up their balance sheet, and they're expecting to end the year with more cash than they started with. So I'm not adding to my STEM position right now because business still is a little bit weak. But if they can like prove that like they can kind of get out of their own way with like managing capital and allocating it well through the cycle and kind of being aware of interest rates, this could be a monster business. It really could. But there's some questions. There's some questions there. Trex befuddles me, Jeff, because I mean their guidance is for like a terrible next quarter versus last year. Demand continues to be really weak. Their distributors and retailers are really trying to deplete inventory and not buying more inventory. But it's so well run. They're still making money, right? Their margins actually got a little bit better. It's going to be a long term winner. So that's Trex. That's Stem. We talked about Lemonade. We talked about Roku, and we
So
talked about Kinsale.
I want to ask about Trex because I'm
Yeah.
trying to look it up right now. I haven't looked at it in a long time. Last time I looked at it, I was surprised. Well, it's been doing well this year, which is weird considering everything you just said. Like, I
Yeah.
kinda wish the bad news would chop it in half so I could buy some because it
I'm
just
trying to figure out the stock went up. They reported yesterday after the market, I believe it was yesterday after the market. Stock went up a little bit, not much. It's up 15 no, it did. It's up 15% this week. So,
yeah.
yeah.
Yeah, year to
But it's
date.
because they're making money. You had a
Yeah.
question. Go ahead. I'm cutting you off.
No, that was the question. I was gonna say it wasn't really a question, it was a comment. Just basically, I wish
Observation.
I wish the year's worth of troubling results resulted in it getting cut in half so I could buy some shares. That's what I was just trying to say.
Yeah, I mean, the stock is down. Here's the thing, from the mania peak, because this is a stock that got caught up in like the 2020, 2021 mania, because everybody was gonna buy a house and everybody was gonna use cheap money to build a $25,000 nice Trex deck. Stock's still down 55% from that peak.
Yeah, yeah.
So,
Alright, you wanna hit some questions now that we're
yeah,
done with those things? So,
I do, and then, yeah, let's take 5 minutes and do that, and then we can do the Smatter folio to wrap up the day.
so there was another comment here by Fourth Horseman about Lemonade. They seem to do fine with the loss ratio as long as, there aren't any catastrophes, bad weather, or anything. Certainly not adding to my position until they do a full good year. I think
Yeah. Yeah.
that's a legit concern. Could
Yep.
any insurance company this is one of the things that kinda bugged me about Lemonade, like, and every company does this. Well, those quarters where they had the catastrophic loss, they tried to spin it like, "Yeah, but if we hadn't had those catastrophic losses, look how good it
Yeah.
would have been." And you can't do
Look how
that
good our
because
numbers would be without stock-based compensation. Look how good
right,
our Florida business would be without hurricanes.
right. But I will say
Yeah,
this,
yeah,
there are some things that are potentially going to help with that over time, right? So the Metro Mile acquisition and expanding car insurance into because Metro Mile, if I believe, with a bit one of the big things when they acquired it was that they were in all 50 states, right?
49.
So
But yeah, it gets them
okay.
into basically all the states.
Yeah. So, theoretically, you bring on more car insurance policies, that spreads your risk out, that spreads your type of insurance that you're issuing out. And, so I think they're trying, they recognize that they're heavily in areas with probably more catastrophic loss than others, and they're trying to rectify that. But I don't disagree with the idea of, well, let's wait and see if they can actually do what they say they need to do.
I agree. Duarte describes it, says it's a 0 or a 50x from here. I mean, I think that's kind of fair. I think it's the odds are probably more towards the 50x or some positive multiple from this because it's small. It's like $1 billion business right now, market cap, I think. It's around $1 billion, maybe 1.1, 1.2 after the big run up. And the insurance market's huge, right? It's absolutely enormous, trillions of dollars.
And
So,
I think the story of the company is worth at least considering, like the whole idea, if they really can change people's relationship with insurance, and I think that starts with pulling in maybe some younger users that are a little bit more like, I want to be able to go on my phone and get a policy in 3 minutes on an app from AI. Um, if they can kind of build a generation of insurance customers that don't view their insurance company as this behemoth thing that they hate,
yeah,
that
their
that
net promoter scores are very, very
right,
high.
that could matter.
Yeah.
I mean, so, like, that's why we've been saying every time we've talked about it and made videos about it and mentioned it on the podcast, it's always been, "Everything is going really well, except the most important things." So, that I think that kinda sums it up.
Yeah. So I haven't had a chance to look. Cena's asking about Redfin's earnings. I haven't had
Yeah,
a chance to look.
I didn't look super closely. I'm gonna pull up so I can just at least get a glance at it.
Yeah.
I
While
plugged
we've got just a ton of good comments in here. People about Roku. Fourth Horseman says, I think there are a lot of companies. I don't understand why people buy their product. Roku being one of them. I mean, it was good in Mexico when it was pirated with all the movies and series for free, but the FBI finally shut that down a few years back. Yeah. So when your thesis is tied to pirating copyrighted um, data or properties, it's yeah, not a great thesis.
I don't know. Like, I like so maybe I'm biased because we have Rokus in my house. I have a Roku. I have one TV that's like Roku built in, and then we have the little box for the other one. And I've used Apple TV. I've used what's Amazon's the
The
Fire
Fire
Stick,
Stick, yeah,
Fox, whatever.
yeah.
Um, I
Firebox.
like Firebox. They have that one that's like a cube. I forget what it's
Yeah.
called.
Fire you mean this the cube? The
Is it
fire
called the
cube?
Fire Cube?
The fire
Whatever,
cube?
whatever.
The
And
one that's
anyway,
like
I've
a cube?
used all of them. I
I'm gonna
actually
put a call out to anybody out there. If you're thinking about maybe going through this and maybe keeping the best quotes, yeah, I'm just saying,
Firebox.
you can tweet those out.
Anyway, my point is that I actually think the Roku platform is pretty good and it works pretty well, and my kids like it and I like it. So I think in a world where we're all streaming television, which I think is where this is going, I think we're going to see less and less people using over the top cable and stuff like that. And
Yeah.
I just bought a new TV recently because mine died, and it has its own operating system. I think it's a Samsung. It's hot trash. Like, I
Oh, yeah,
hate
no,
it.
they're
So
garbage.
I feel like at some point it's going to consolidate into like people who use Roku or people who use Apple TV or people who use like the Amazon product, right? I don't think there's going to be like 3 or 4 big ones that everyone uses.
I agree. Yeah, I
And if
agree.
they're one of those 3, I don't think they need to be like the market share leader even necessarily. They have the ability to monetize the Roku platform a lot of different ways. And if they can, the advertising market can stay strong and they can actually find ways to monetize through ads using the platform, because you don't see Apple doing it the same way. And by the way, they're a competitor in a lot of ways too to some companies that would want to advertise. So there's some of that neutrality thing that's going on with Roku. So I don't know.
Yeah.
I don't know that it's, again, I'm not a super bull for it. I fully understand that it could not work out, but I'm at the point. What was Tyler's Crow's expression? I have enough conviction not to sell. Um,
Yeah.
that's kind
Yeah,
of how I
right,
feel about Roku,
right.
and we'll see how it goes from here.
Yeah, we've got a couple people talking about, um, Mercado Libre having
Yeah.
become, like, sizable, like Scott and Duarte both mentioned, like, it becoming a really large portion of their portfolio. I'm in a similar boat. It's around 7% of my portfolio now, which is significant for me, by far the largest portion of my portfolio. I kind of agree with the idea of thinking about the long runway of growth. Um Who was it that mentioned, Fourth Horseman says, "Wish they had more money to buy it." I think was it Scott that said concerned about political risk? So and that's a reality
Yep.
in Latin America.
Yep.
You know, I think that's a concern, maybe not political risk specifically, but like geo risk, economic risk maybe. There's
Well,
just
one thing I'll say about Mercado Libre that, and it's tied into a podcast that's not too far back in our catalog, is
Mhm.
they've made, without looking at the numbers right now, I believe the last couple quarters they've been making some pretty good strides in Mexico.
Yeah,
And when we had Bill Mann on a couple episodes ago, we one of the questions we asked him at the end was basically what's I think it was something along the lines of like what's the part of the world people will be talking about in 10 or 15 years. And we were thinking he would say like India or something, right? As or maybe Africa as like the next emerging market to sort of be prominent like China has become.
right, and he said Mexico.
And he said Mexico. So I agree with the geopolitical risk concern with Mercado Libre. There's also a little bit of a when is the other shoe going to drop thing with them, because it's like every quarter just
Yeah,
kicks ass, and I'm
these
like,
numbers were
and
absolutely
I'm
insane.
always like, what am I missing? Is there a fraud? I'm scared that there's a fraud because it's just too good.
If
So
I was I will say this, if I was 60 and it was 20% of my portfolio or 20% of my wealth, I would sell because you're getting close enough to your like that portfolio, that's your money, right? That's your actual money that you're gonna need soon. Then you start thinking about it being a GE in 2000, right? Or one of those scenarios where you just what happens over the next 20 years destroys a massive amount of wealth, and then you're protecting capital, and you're not so much focused on growth. For me, in my mid-40s, I'm thinking I can invest in other things, and that's how I'm gonna diversify away from it. I don't need to sell any of this great company to diversify my exposure, right? I'm gonna have other winners that are gonna help do that for me. So,
yeah,
well, look, dude, it's almost 5 minutes, till. So if we're gonna talk about this Matterfolio, we gotta do it now.
let's do it. We'll
We
put the
gotta do it
slide
now.
up. I put a screenshot in the slide. We won't spend too much time on this because we don't have too much time, but it's also not.
Apologize to the questions that we didn't get to. We had I
We
think it's
got
fair
to
to say
most. We have
we
some
did. We
comments
did.
here.
We did.
You know, more comments chiming in than we did questions here at the end. I thought there was a good point here from Fourth Horseman about unbanked people in Latin America, and how that could be a tailwind for Mercado Pago. That's a really good.
Oh, it
That's a
already
good
is
point.
an enormous one. Is an enormous one. Well, Marco Galperon talked about it on during the pandemic. He went on a podcast with I don't know the CEO of maybe PayPal, and he talked about like his goal. Their goal is to be the payments platform for Latin America. I mean,
Yeah.
that says it all right there. Okay, let's talk about the Smatterfolio. Off to
All
you,
right.
Jeff.
I want to. Well, all right. I was going to ask you to start because I wanted to pull up a chart to show later, but
Okay. All right. I will do it then. So we're looking at the October results, right? So we are the first month of the first quarter. Team audience 13% up. That's in the month or is that the year to date?
that's year to date. So we've never kept track of just the month because that
That's what I
seems
thought.
to be
So
too short.
13% is year to date.
Correct.
And then we've got Team Jeff,
Well, you're skipping yourself. Oh, you want to save
10%.
yourself for last?
10%. Team Smattering is really just taking a beating, down 12%. That's the worst performing one. And then the Unportfolio, thank you, Jeff,
But
up
look at me
60%,
helping out a little bit with Tesla.
sort of,
It has
sort of.
dropped
But you're
40%.
not helping out. You're just not hurting as much.
Oh,
And the cream rising to the top,
all
the
right.
turd for the
I'm just
bowl,
gonna talk over it. Up.
7%. That's me. Up 27%. Yes.
All right. We only have a few minutes here, so here's a takeaway that I have about my own portfolio here. It is these are only 3 stock portfolios, right? We're not advocating that anyone have just 3 stocks, but if you use it as sort of a example of what could happen in a larger portfolio, I have a stock that is down 86% and I'm still up 10%. I am not far
Yeah.
off the S&P 500's return for the year with 1/3 of my portfolio being down 86%. So I just think that's a nice example of the whole. A few stocks will you know cover the losses of your big losers. So I just thought that was interesting. But you mentioned the our combined portfolio. Hold on a
Right.
sec.
So I'm taking a look here just while you're doing that.
I'm like
The
choking up.
average, so this is the not including the Unportfolio, but the average of the stocks that we actively picked, they're up 9%.
Yeah.
All of them, all of the portfolios are up 9%. And that includes one that's down 86, one that's down 46, one that's down 24, one that's down 20.
And what's funny with this is how many of these stocks are super volatile, like have had like crazy ups and downs. Like I'm trying to remember which one we pointed out another time. All right, so like look at Lemonade, right? There was at the end of April it was down 21% for the year. And then at the end of July it was up 65% for the year and now it's down 20 because this is obviously before the big
Just
pop
before
after
earnings,
earnings.
right? So you put the earnings pop in, and it's probably back to break even again.
But then, like, the one that's, like, actually, the one that's been the most steady in one direction, not steady, like, staying the same, is Boston Omaha. That was the chart I was trying to pull up because 'cause it's been, like, a non-volatile roll down the hill.
Yeah.
Stop sharing, I'll put it up real quick,
It's
but
it's like it's like your teenage kid who just keeps coming back every month asking for, "Can I have just some more money? I
right,
want some
like,
more.
it's just
You have a
there's
little
been
more money?"
no nothing positive here. It's just been down. This is one that I've really been thinking about. I don't think about backing up the truck and buying a lot of a stock often, but that's one that I'm very tempted on
Yeah.
because I you looked it up the other day. What it's trading at a discount to its book
It's
value now,
it's
right?
it's trading for right now, and again, this is please look it up, but I believe it's trading for around 2/3 of book value, 70% of book value. And it has an impeccable balance sheet, doesn't have a ton of debt, has plenty of cash, and it generates positive cash, and it's trading for substantially less than book value. So, yeah, I think that's really good. So, we had a lot more people show up than I thought would show up, Jeff. This has been an absolute blast as we wrap things up.
Yeah, this has been great. So I want to thank everyone who right I've been checking throughout the time. We've had about 10 or 11 people pretty consistently through the hour. So thank you everyone. Thank you for the comments. A lot of back and forth. Yeah, we recently figured out how to play sounds live so we can end the show with our theme music.
As always, no advice happening here. We love to give our answers to these questions, share them with you folks. But it is up to each and every one of you to answer your own questions out there. You can do it. Jeff and I both believe in you. Jeff, I will see you next time.
All right. See you next time. Thanks everybody.